G'day everyone, it's Engelo Rumora here. I'm your favorite Australian and the real estate dingo, bringing you another awesome vlog. And today I'm talking about this, how to best prepare for a market crash. Let's get it started. Okay guys, so check this out. I'm gonna be a little bit selfish here today. I'm gonna talk about myself and some of the things that I'm currently doing right now and looking to do just to kind of prepare for a market crash, okay? Now, I'm sure that you guys have kind of, seen in the news, the real estate prices are pretty much at all-time highs. The market is pretty expensive on the East Coast and West Coast, and, so is the stock market, right? We've had a peak, even though it's kind of tapered off a little bit now, but still, everyone's talking about how awesome everything is, and everyone's made a lot of money. And, that's kind of when you should start getting a little bit fearful. Personally, guys, I don't think that we're still kind of at the top of the cycle. We're kind of pretty far up that hill, but, I don't think we're there yet. So time will tell, but it's very hard to predict these things. And look, even if you're a Debbie Downer or an optimistic, I can't think of anyone with that name starts with an O. Optimistic Oscar. There you go, optimistic Oscar. I just got a little whisper there from someone. It doesn't really matter, guys. I still think that what I'm about to tell you is something that you should look at implementing or replicating in your way, no matter what the market is doing, no matter what cycle the market is in, okay? So let me tell you about what I've got in the works right now and what I plan on implementing. And kind of before I go into that, I just want to share, something that I have, heard many times, I've read many times, and I've been told many times, and I truly believe in, and that is that, multimillionaires will have multiple streams of income. They'll be diversified across different asset classes, across different businesses, and that will generate, profit and residual income in various ways. So let's talk about, something that I do and something that I'm planning on doing, okay? So first of all, I run a turnkey company called Ohio Cashflow. We buy distressed properties, we fix them, and we sell them for a profit. It's as simple as that. I've been doing it for 5 years. We do it really well, and we make a lot of money doing that. Now, I understand that, if the market does tank, a lot of investors are probably going to be on the sidelines, and they're not going to be investing as actively as they are right now. So that's going to affect sales, okay? So if that affects sales, we make less money. So what else do I have to help us weather that storm, okay? So that's kind of what my thought process is. And where I have kind of, come across, and another business that I also own is a property management company, right? Where we manage hundreds and hundreds of units. And I always like to refer to this property management company as recession-proof because, the two most important things to humanity are food and shelter. So as long as people need a roof over their head, they always need somewhere to live. They're hopefully going to keep paying the rent. And as long as they keep paying the rent and we keep managing well, we're going to get residual fees every single month, right? So we've got a turnkey company. We make large lump sum profits. We've got a property management company where we make residual fees every single month. Okay, so those are kind of my two mainstream income streams, that I have today. I have been holding on to a lot of dry powder, and I'm kind of waiting for certain things to happen in the market. You know what they say, guys? Cash is king and cash flow is queen. Another quick little tip for all of you guys out there that are, Debbie Downers, not optimistic Oscars. Look, it's always good to be sitting on cash if you feel that we've kind of reached a peak from a market cycle standpoint, because you want to go all in when shit hits the fan and everything just kind of collapses. That's when, historically is when most of the millionaires are made, and some of the best companies that we know today are established in market downturns. So it's always good to have some dry powder, just like I do right now. But what I am looking at, believe it or not, and what I want to try and do next year is I would like to buy, a large quantity of single family homes in bulk, or I would like to purchase a, distressed multifamily asset, fix it up, increase the occupancy, and just hold it. I've been very active with a lot of my capital. I haven't really been investing in buy and hold assets just because I want to keep growing my wealth. But I feel it's going to be a good time to maybe pull the trigger on something if the right deal comes along, because I wouldn't mind to have an additional stream of income, right? We spoke about the profit that we make in the flipping business. We spoke about the residual income that we make in the property management company. Now I wouldn't mind owning a couple $100 to continue making additional passive income. Once again, spreading that risk, having multiple streams of income, because I guess that's what all of the multimillionaires do, right? So that's kind of the third thing. Another thing that I'm also working on right now, and I've been working on it for quite a while, and that's an online company, which is kind of going to be subscription based. It's going to be generating very similar to the property management company, monthly fees. There's actually two online companies that I'm looking at. One that I own that I'm heavily investing a lot of capital in. Hopefully, I'll be able to get it to where I really want to get it to. And another one that I might acquire, put the right people in the right spots, and just put it on autopilot, not touch it, and maybe get some additional streams of income there. And guys, last but not least, believe it or not, I like stocks. I pretty much got slammed not too long ago for saying why you should never invest in stocks over real estate. But look, I think the stock market, if you kind of know what you're doing and you know how to, look at a company and estimate what you believe its market value would be, something that I'm not going to say that I'm an expert at, but look, I've run various companies. I've been reviewing P&Ls and balance sheets and all of that mumbo jumbo. I understand, the kind of economics within a company that I guess I could get a good grasp of the performance of a specific company that is, a Fortune 500 company, hypothetically speaking, and especially if that market, tanks where everything seems pretty cheap. I think it would be a good opportunity to potentially invest some of my capital, diversify away from hard assets and go into a paper asset. I like dividends, so I still want an element of a passive income from a dividend standpoint. But look, I would consider investing in stocks. I do have a few oil investments, which are more of a buy and hold type, a larger scale capital gain type investment. So once again, guys, this is something that I'm doing. I suggest that you also go down that path in regards to focusing on multiple streams of income. I think you're kind of playing a risky game if you're solely dependent on one business or one investment strategy or one piece of real estate, right? I think you should have multiple things in the works, because if one fails, you can always rely on the other one. And Warren Buffett calls it the chain link of error, right? If one link is faulty, the chain is useless. And something that I tell all of our investors, if you just invest in one property and it becomes vacant, that's a 100% hit on your portfolio. But if you have 10 properties and one becomes vacant, that's only a 10% hit on your entire portfolio. So guys, look, that's my 2 cents. Quickly before I go, I want to leave you with this. If your bread and butter is real estate, or if your bread and butter is stocks, or if your bread and butter is tech, I think that you should stick to what you know best. If you start, diversifying into industries that you do not understand or that you don't have any background in or whatever it may be, I think that's very risky. So, for example, in my instance, even though, I've got various companies and various investments, the fundamentals of everything that I'm doing is predominantly real estate related. So you might think, okay, well then I'm too exposed just to the real estate market. Not really. I've got a turnkey company where we buy, fix, and sell. I've got a property management company where there are residual fees. I would own properties or a multifamily where I would get passive income. Stocks, upside for growth with a dividend. Online companies, once again, different type of business, residual income, and then of course a lot of other investments like the oil investment that I have. Believe it or not, I invested in crypto too. Long story there. But I've tried new things and I feel that I'm pretty well diversified, across various businesses and asset classes. So that's it. I'm done. I hope you enjoyed watching this video. Hey, I'd love to hear from you. What are you guys buying? Where are you investing? How have you structured your finances or your wealth building? I'd love to hear from you. Please comment below. That's it for now. Thank you so much. I'm Engelo Rumora. I'm your favorite Australian and the real estate dingo. Catch you in the next vlog.